Hello and welcome to Cost Accounting. I am your host, Dr. B, and today we're going to be talking about support department costing. First and foremost, it's important to understand what a support department is. As you may recall from Principles of Accounting 2, a support department is a department that supports the operational departments of the business. So a support department might include the back office, the accounting office, the legal department, the human resources department. These are all support departments that support the operating departments of the business. So that's why it's important to understand what a support department is and what does it do from a cost perspective. So a lot of companies have more than one operating department. Operating department is part of the business that makes the products and services available for sale, and they sell to the external customers. Operating departments generate revenue. Support departments support the operating departments or operating units. Oftentimes, departments are broken out by division or segment. A division or segment is what separates the operating departments or divisions within the business. Divisions or segments operate in tandem with other divisions and segments within the company to fulfill a similar purpose. Of course, an example of that would be Walt Disney Company has multiple different divisions: Media Networks division, Parks and Resorts, Studio Entertainment, and then, of course, Consumer Products and Interactive Media. Each of these divisions or segments exists within the Walt Disney Corporation that functions as a whole. Companies might also separate out their departments by location or outlets, where each outlet or location operates in the same business format with physical locations. An example of that would be a franchisor like Cracker Barrel. They have 660 restaurants without franchising, or there might be a multiple franchise operation, which could be categorized the same way. And McDonald's Corporation would be an example of that. When it comes to operating units, to measure their KPIs or key performance indicators, we often look at tracking the revenue and expenses based off of their operating activity, based off of the operating unit. So within a small business, we might look at something like the different locations, or we might look at the different divisions to break down their revenue by location or division to understand their revenues and expenses, to measure their KPIs in a more meaningful way. When it comes to the expenses, it's a little bit more complex. And the reason for that is because the support units support the operating units. And those support units have expenses that we allocate to the operating units. And we'll talk about that here shortly. So again, what is a support department or unit? The support departments exist to support the operating units. And as I mentioned earlier, examples of those would include the accounting office, the back office, administrative, the legal department, the other back-end departments that support operations. The operating departments earn revenue, support operations do not. There are costs incurred within support departments because they don't have any revenue. And these costs are associated with their activity base. For example, in the accounting department, the activity base might be the number of purchase orders. And the number of purchase orders, that cost the purchase orders get distributed to the accounting department costs get distributed to the operating departments based off of the number of purchase orders from each department. Another way to look at this is by who the user is. A user department consumes some of the services of another department. This might be either another support department or another operating unit. For example, the legal office, which is a support department, uses the services of HR. They use the services of accounting. So the legal office is the user department. Or another example would be HR department uses accounting services. Therefore, HR is the user department in this example. Or it could also be one operating department to another. The costing comes from the notion of value. And so we look at the value chain as a series of departments to understand the value being supplied to the operating units. So here we have a research and development department, which sends their ideas to the design department, who then sends the ideas to the supply, raw materials, then production, work in process. They send the prototypes to marketing. Marketing sends the prototypes to distribution through finished products, and then distribution selling it to the customers. And then we end with customer service, and then we start the whole process again. There is value being added to every support unit in this value chain. Again, some examples of support units: legal, HR, accounting, maintenance, sales, design, IT, employee wellness, travel services, employee cafeteria, grounds and parking, security, etc. These are all support departments. It's, again, a support department because it does not generate revenue. It provides support to the departments that generate revenue. Costs associated with these departments include things like salaries, wages, benefits, pension contributions, employee taxes, continuing education, training, professional dues, fees. Other costs would include things like insurance, supplies, repairs and maintenance, travel, subscription fees, etc. So here we have a nice visualization that represents the support departments that support the function, the operating departments. The example on the left, we have administration, marketing, and groundkeeping departments. They support the operations of the daycare center. The daycare center generates revenue. The support departments support the operating departments. Yeah. To the right, we have other examples, a golf course. So we have a golf course company that has two different locations. We have administration, marketing, and groundskeeping that support both locations within the company. Yep. Each location has their own revenue being generated. Therefore, they have their own income statements, balance sheet statement, cash flows, etc. When it comes to allocating support department resources, the decision makers look at the full cost of running the operation, the operating departments. This helps managers to, of course, identify pricing strategies for products and services being sold at those operating departments, which ultimately helps company profitability. And of course, the support costs are burdened with the fact that they won't be able to fully control what happens in those operating departments, and optimizing the consumption of the support department resources. Decision makers also determine individual profitability in operating units, whether divisions, branches, or locations. Oftentimes it's based off of the organization structure. It helps the company as a whole to understand the contribution margin from each department or location, which helps to make decisions on those departments and locations. As I mentioned earlier, the cost allocation basis for these departments can sometimes be based on their function. For example, the accounting department allocates their costs to the operating departments based off of something like purchase orders, the number of purchase orders for each department. Another example would be the legal department allocates their costs based off of the number of lawsuits from each department, etc. You see, for human resources, it might be based off the number of payroll checks issued. We call that the allocation base. And what the allocation base does is it reflects the relationship between the resources provided by the support departments and how they're utilized by the operating departments. It can be expressed in things like hours worked, building square footage, number of employees. These are more examples of allocation bases. So how does it work? What does it all look like? So let's go ahead and talk about that. There's the direct method of allocating support departments costs. There's the step method, the reciprocal method. And so these are the three possibilities of allocating support department costs. And so let's look at each of these methods. The direct method, just as the name implies, directly allocates the cost to each operating department based off of their function. And in some cases, it's proportioned out by a percentage distributed equally across departments. But oftentimes it's based off of a driver, which might be something like the square footage, number of employees that the department has, number of purchase orders, number of lawsuits, etc. These are that's the direct method of applying. Here we have an example of two companies that were represent two operating departments, and we have the support departments that provide services to these two companies, or two departments, if you will. And so the parent company provides accounting services and of course other support departments to these two companies. So let's take a look at the data. Here we have the support departments for accounting, administrative and purchasing based off of the costs associated, and then we divide it out to the two companies based off of their usage. So for example, the cost to operate the accounting department is $15,600 per year. The allocation base being used here is hours in accounting. And so it's broken out to the other support departments, and of course to the two businesses, two companies. And we can see that allocation. Same with the administrative department. It's being allocated to both support departments plus the two companies, and purchasing, the other two departments plus the two companies. So we can see the allocation base for all the departments, for all the functions. So again, for the accounting department, as an example, the accounting is allocated across administrative and purchasing, and so the companies share those. Right? The 15,000 is allocated out to the two companies based off of their usage in terms of number of hours. So here we have the two companies, 9,204 to Burger Shack, 6,396 to Meals on Wheels. And so we can see how we allocate the support department costs to the operating departments based off of this data. So the diagram shows us how the allocation using the direct method and how it's directly allocated the cost right to those departments. So to sum it up in a simple graphical form, we can see the allocation for all three support departments to the two businesses. What other costs are considered in the direct approach? Direct materials, direct labor, factory overhead, operating expenses for each company is taken into consideration. So let's take a look at the second method, which is called the STEP method. And this one recognizes that support departments provide services to each other as well. And so as a result, the implementation is done in steps. That's why I call it the STEP method. So there's two steps to this approach. First is to rank the support departments based off of the company's selected key performance indicators. Like most services, we use provided to other support departments and operating units. For example, the accounting department supports the two other service departments plus the two operating departments. The second step is to allocate the cost from the highest ranked support department to the other support departments first, and then the operating units. Third step is to step down, which, after the support departments, then it's to the operating units. And then continuing down the list in order. So here's a nice illustration of the STEP method. So here in green, we have the accounting department, we'll say, which provides support to the second support department, which might be human resources. The red one might be legal. And then, of course, they also provide to the two operating units. And so it's a ranked system approach. So looking at our earlier example, looking at the hours worked as the allocation base, we can allocate the accounting department's available cost to the other support departments and the two operating departments. And so here's what that would look like. So taking out the from the accounting and allocating that to the administrative department, purchasing department, and then the two operating companies. So from a visual perspective, the allocation goes and is spread across the remaining 4. It's based off the number of hours. Yeah. So here's what that looks like from a diagram perspective, taking the 15,600, and of course dividing by the number of operating hours, 1,560, and that gets spread across to the remaining departments based off of their usage. Sorry. The third method is called the reciprocal method. The reciprocal method captures and exchanges services between support departments and from support departments out to the operating units. So first, we look at the cost sharing between the support departments, and then the second step, out to the operating units. Because support departments provide other services for the allocation, we add in those other services before locating to the operating departments. So one method to apply this is done manually, but it is, however, relatively difficult. It's efficient to use this method using Excel, and so I'll show you what that looks like here. After following the steps, you'll want to use Excel to pump in the following information. And so once that's done, you can compare the 3 different models. So based off of these 3 different models, you can see that there's some difference between direct method, step method, and reciprocal. The direct method is probably the most commonly used method because it is the easiest, and it is probably the most accurate based off of the activity base. The step method can also be relatively accurate, and the reciprocal method. You can see that looking at the differences between all 3, there's some variation when it comes to the total allocation to the operating units. So it's important to understand that. So what are some common costs? These are costs that are shared between 2 or more parties or 2 or more departments. Common costs will include things like rent expense, supervisor salary, and other shared facility costs like utilities. A standalone allocation, just as the name implies, we identify the cost for each entity that would have to pay if it was standalone. Common costs are allocated based off the percentages that each party would have to pay if they had not been shared. Yeah. And so common costs are usually never shared equally. Oftentimes it's based off of its activity use. So here we have an example. Let's say you're graduating from college. Your parents decided to remove you from their cell phone plan because, you should be paying for that on your own. Your other siblings went through the same process. You wonder how you would save a few dollars if you were to join your brother. And so you did some research. Your brother's bill is $75. If you have your own plan, it would cost $85 if the rates went up. If you were added onto his bill, his total bill would jump to $115, which would then be the common cost. But again, remember, common's not always common. It's based off of usage. So it would be unfair to say that the 2 brothers would pay $40 each in this new cell phone plan that's shared between the 2 brothers. That wouldn't necessarily be fair because, again, it would be based off of usage to make it fair. So the standalone is brother paid $75, you paid $85 for total $160. If his share is $75, you divide by the $160, his share is actually 47%. Your share would be 53%. So you would take the 115 that the bill would be and multiply by the 47% and 53% to get the correct allocations if you were to join. Another cost method is called the incremental cost method. It's where we look at costs incrementally as they're incurred. Okay, so you look and using this method, first rank user across the allocation based is cost up to the standalone cost. The second ranked user is the additional cost, incremental, right? The additional cost that arises from 2 users instead of just 1. With more users, it goes up incrementally. So in looking at the earlier example, using incremental analysis, we've already calculated the common costs, where one brother pays $60.95, the other one pays $54.05. Now we got the common cost, we can look at incremental. So in looking at a shared plan, adding a second line, second user would be us. Okay, the common cost is $75. So we take the 115 minus the 75, which will be 40. $40 is the incremental cost. Sales revenue is sometimes allocated when there is a bundling of products and services. A bundling of products and services involves grouping similar products and services together. Bundling, for one price, oftentimes. A bundle. Example of this would be the cable company provider might also provide you with cable television and internet services and maybe a home phone. So like that would be a bundle, right? It's 3 different services, 3 different components, one price. That's a bundle. It allows the company to measure the sales and profitability by product when we allocate the bundle revenue. The Financial Accounting Standards Board provides some guidance on this allocation process. So we learned a lot about support units and operating units, how the support units allocate costs to those operating units, and we also learned a little bit about bundling. So thank you very much for your time today. I sincerely appreciate you. I wish you continued success in the course. If you ever need anything, please email me, call me, set up office hours. I'm here for your success. Thank you so much for your time today. I appreciate you. Take care. Bye-bye.